Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is at current 5:20 in the a.m. Eastern Standard Time, November the 2nd, Friday. Happy Friday. Let's get to it. Pre-market activity will be the first topic we will discuss. Then we'll segue over and into Gold members' stock chart request, as well as a couple of symbols we are looking to trade, and we'll also discuss a few of the trades that we booked profits on this week, why we entered, why we exited. So let's get to it. Last night, after the market closed, Apple reported earnings, and the market was not happy with their announcement. I won't go into details, but they were not happy. Apple is getting hit this morning. We have bounced off of the lows of last night's closing session, but you can see this 4-hour bar here, which just opened up about 21 minutes ago, is coming under pressure. I think that this is an oversold dead cat bounce, and in all probability, we're going to continue lower here. That's my guess. Now, this chart here is a perfect example of as to why you should never trade the initial news on a stock. Now, initially, let's go to a 15-minute chart for a moment. Initially, you had a blip higher, a knee-jerk reaction, which is frequently wrong, that did not last. That's why we never, ever trade the knee-jerk reaction on anything, whether it be an economic data point. And in fact, today is Jobs Friday. So note to self on that one, a big number. Back to Apple. We do not trade the knee-jerk reaction because often it is wrong. And you can see that after the algos got done digesting the headline, they did not like it, and they dumped the shares of Apple. So expect lower lows here, I would imagine, on Apple. Back to the 4-hour charts. Let's go with the dollar, and then we'll go into the metals, because the dollar really weakened up yesterday, and we're seeing a continuation breakdown overnight. I thought we would put up more of a defense here at this lower band of support, but we did not. We broke through it overnight. So it looks as though we're probably going to come down here to the 96 level, but the dollar is coming under a lot of pressure, and we need to keep in mind something about the dollar. The dollar has a target on its back. The president, the Treasury Secretary, they want the dollar weaker. Also, you have the Petro Yuan exchange over in China transacting oil in yuan, not the US dollar. You have the Iranians, you have the Venezuelans, Russia, China. These countries are all seeking to move away from the US dollar as the world's reserve currency. And while we're still early in the game, the foundation is being set to undermine the US dollar. And what are they doing? They are backing their currencies with gold to do so. Let's take a look at gold. Gold is rallying off the lows of the session. We discussed gold yesterday morning. It was ripping higher. I think we're moving higher here. We are long of the gold miners. Yeah, we're beginning to, this is early in this 5-hour bar right here, but you can see that we're beginning to poke our head above the upper band of resistance. And we're not as overbought as we were yesterday morning. So gold is looking good, a bit of resistance above, but net looking very strong. Now silver, it had a very powerful day yesterday, and this morning it is up as well. We are already long of silver. We have been for a while now. We're going to be looking to add to our silver position very soon. And the gold miner, the gold, the silver trades, these are core positions that we are building. I think that we're setting up for a major, major bull run in these commodity names, as there is an attempt by foreign governments to move away from the dollar and an effort by the U.S. government to devalue the dollar. making our products more attractive overseas. So more to come on best stock charts tomorrow, which I'll be sending out on Saturday. It's free. If you want it, enter your email address on the website. We hate spam too. Let's take a look at the 10-year Treasury note. When the note is pulling back, that means yields are rising. And when the note is rallying, that means yields are pulling back. And this morning, we're down slightly. We're flirting with a breakout point here in green. Take our crayon out, throw some lines up here. I'm a big advocate of annotating your charts, folks. So we are in an ever-tightening trading range on RSI. I think that we may, just may, move higher. It appears as though we have a double bottom setup forming here. And that will put pressure on yields if we break out, especially if we break out above this resistance level here in yellow. That'll be a W formation. Here's the left side of your W. Here's your pivot point. Right side forming. We're looking for a breakout. Let's take a look at the stock futures, the S&P 500. Now, as I mentioned earlier, Apple reported earnings. They disappointed. This market is weak despite the fact that we had a bit of a rally this week. We have not been of the mind that this is an investable market as of yet. We have not had a double bottom retest of lows. I think that we will. So at this point in time, we'll be discussing with members when we put on new short positions. We were short. We covered those shorts. We did not get out at the bottom. I don't want to try to paint the picture that we were short the entire time. We did close out our short positions before we hit the bottom. But still, we identified the fact that the markets were ripe to be shorted. We did open up those short positions. They were profitable. We did identify opportunities to the long side with less risk and more reward relative to the overall market. So net, we've had a very good couple of weeks here, despite the fact that the market has been under some pressure. And we did take advantage of the rally because we saw it setting up. We had cash on the sidelines. Now, to the S&P 500, we have some resistance right where we're at right now. There are buyers back here who bought, enjoyed this rip higher, then it failed. They want their money back. Can we move higher? Sure. I think that what we're going to do here is quite possibly head up to this upper band of resistance here. And then we may see some sellers move in. And that is at around the 2007-72 level. We may overshoot to the upside. But that's where I expect to see some sellers move into this market. The Nasdaq up 10 points. It's actually pulling back right now. We were overbought. We may see a fade here. Whenever you see the candlesticks pierce this Bollinger Band, the upper band, I don't use a 2 standard deviation. I use a 3 standard deviation, making it a higher level of and quote-unquote overbought condition on the Bollinger Bands. So we may fade here. If not prior to the opening, perhaps just after it. How do we close? I'm not quite sure. We may recover for all I know. It's short covering Friday. Don't forget we have the jobs report coming out at 8:30 a.m. Eastern Standard Time. Let's go to our gold members stock chart request, as well as some of the trades that we're watching and the stocks that we just booked profits in. Let's get to it. Okay, so the strategy as we proceeded into this coming week was to identify opportunities in this market to get long of it. Now, the TNA is the direction leveraged ETF, putting you long of the small caps. We saw bottoming action as noted by these bottoming tails, wicks, shadows. And we saw pressure because we saw the same action on the S&P 500. We saw pressure on the VIX, the volatility index. That was implying to us that We had some distribution of VIX options, meaning investors were selling their insurance contracts. They were cashing in, taking their premiums. We were at support, last seen back in February, which is another good reason to think about getting long. And we had several days of no new closing lows, and that's important. So we got long of the TNA right here on the 30th, and then we booked profits the following day as we began to see sellers move in. And you'll note that we closed well off the highs of the day on the 31st. Now, you may be saying, you left a lot of money on the table here by closing out that position and not holding into the first. Well, I want you to think about what it takes to trade a market that is in correction mode. We do not hold out for the top dollar. When you have a 3.5%, 4% profit within a 24-hour period, you book it. It's a game of, I'll use the analogy of baseball. That's what I use with members. Right now, we're going for singles and doubles, not triples and home runs. If you do that, you're going to wake up one morning and you're going to see a gap down in the market, and you would have wished that you made some of those profits real the prior day. That's the strategy. Were we in an upward trending market, I would hold on to it. I would have bought the breakout and held on to it. But this current market environment is not conducive to investing. We do not have a confirmation bottom, a validation that we have hit bottom yet. And for all I know, we did. For all I know, the TNA can go to $200 per share this time next year. But it's improbable that we have seen the bottom yet. And more than likely, we are going to pull back, retest, and we'll see whether or not it holds. If it holds and we rally to new highs, well then, all of a sudden, we begin to think more longer term. But we did book a nice profit in this 24-hour period. LOB. I was talking about LOB last week on Best Stock Charts. I'll see if I can link to it. It was at extreme oversold levels with RSI below 10. I think we had a 7 handle at one point in time on RSI. So we entered here on the 30th again on this reversal day. And also, going back to the 4-hour chart, you could see that we were poised for a breakout. And we did so. We had a nice consolidation, very tight. The probability of a breakout was fairly good. I normally do not want to anticipate a breakout on a stock. But when you have a stock that is sitting with an RSI below 10, what's the probability of it breaking out versus breaking down? It's pretty goddamn good, right? So we had the risk in our favor, and we also knew that there were a ton of shorts waiting to get squeezed. They were asleep at the switch, so we bought the shares in this trading range. They gapped up higher. You could see some sellers began to move in. First out, best out. We booked profits, and we were up about 10% in 24 hours on this trade. Now, FerroCorp, we'll stick with this chart for a moment, still a 4-hour chart. FerroCorp began to break out here, and we took note of it. Again, this was a stock that had RSI, let's go to a daily chart, had RSI down here, well below 20, below 15, and back to the 4-hour. And we began to poke our nose out of this resistance level here in yellow. We opened up our position. We had been building a significant position here, and the shares took off. So again, another trade where we booked a handsome profit, and that was within a series of days. Our average basis cost was around $16.40, around there. But we had built up a significant position. So while not a huge point gainer, it was significant on a percentage basis, and when you had a large position, it made a difference to our portfolio. I'll show you what the daily chart looked like on a static chart. All right, so here you have it. RSI is now at 41.79, but when we were buying it, nobody else wanted it. This downtrend we identified as being unsustainable, and this sell-off was well ahead of the overall markets. So we knew that there was very little risk to the downside despite the fact that the markets were going into free fall because RSI well below 20. We had hit, and this is what I try to discuss on best stock charts. You need to know where you have historical support. What happened? We hit historical support last seen back here in April 2017 when it acted as resistance. Then again in April, it acted as support when we did a retest. Resistance back here in 2016. Support back here in June of 2015. So we knew our numbers. We knew where there were buyers that were willing to help support our decision to go buying the shares because they were watching these charts as well. Know you charts. That's why I use the tagline, trade the charts, not the hype. Now let's go to some members stock chart requests. I mean, this one here, we're talking about a stealth stock, Xilinx. I haven't even thought about this stock in years. And we broke out to multi-year highs. Let's go to a quarterly chart. This was a high flyer at one time. Wow. Quarterly chart. This goes back to the dot-com days. And we have now broken out to new all-time highs on Xilinx. So what do I think about Xilinx? I love it. I absolutely love it. This is outstanding. And note, I haven't even looked at a daily chart yet. Forget the daily chart. I'm more interested in the higher level view. Look at this sound base, a multi-year base. A beautiful chart. Now, this is a quarterly chart. We're in the second month of the quarter. A lot can happen. I want to update the chart to illustrate to you how we're setting up technically. Now, last quarter, we broke out above resistance and we closed there. Very, very significant stuff. It doesn't matter where a stock, an index trades intra-period, meaning in this case, a quarterly time period, a time frame. What matters is where we close and where we saw topping action back here in April 2000 or the April quarter. And then again in the July quarter of 2000, we sold off and then we broke down. In the July quarter of this year, we successfully broke out and now we have a continuation breakout to new all-time highs. Very sexy stuff, daily chart. All right, so on a daily basis, you're getting shorts getting killed here, as they should be. I think that we could pull back to 83.99 and retest that breakout point. That would be very good. Now, if we close back down below 83.99, I would avoid and I would wait for it to poke its head back above and close above 83.99. We have good volume. So we're seeing accumulation of the shares. Let it pull back. Don't go chasing it right now, or you can get sucker punched like people did back here when you had a similar looking rally and then we sold off. Don't let that be you. Great chart. Longer term. The New York Times. All right, so we have a breakout, a 52-week high. We have a double bottom setup on RSI. Stokes are rising. We're overbought, quote unquote, overbought relative to its third standard deviation Bollinger Band. So I can't buy it here. I need to see a pullback, a consolidation, and then I would buy the breakout, whether it be a bull flag setup, a triangle formation, what have you. I would buy the breakout. Good volume yesterday. But we did see some sellers into the close. So I would buy the breakout. We may get a pullback to 26.91. That would be a good support level to defend for an overshoot down to 26.80. And then I would look to enter a trade. Not right now. And I would keep my stop right below, if you want to keep it really tight, right below $26 per share. You want to keep it loose, $25.50. We close down below that level. Get out. Deutsche Bank. Let's first go to a weekly chart. Weekly chart, I have been warning about Deutsche Bank for a long time now. There's something very, very wrong with the European banks. Just because we had an oversold dead cat bounce and we're in the process of one does not mean those issues have been resolved. Now we are trading back above $10 per share. The question is, do we close there? And do we hold it? My guess is no. That doesn't mean we can't see a continuation move higher up into try to retest 1036, maybe even $11 per share. But until such time as we close above this upper band of resistance in blue, this stock is weak and will probably get weaker. Daily chart. Now we have broken out above resistance on RSI. We are trading at resistance at the 1036 level. We hit it yesterday and we backed off. Volume was good. So might we have some more upside here? Sure. But I think that inevitably these shares are going to hit resistance and then they will fade and roll over. So I would not be a buyer of these shares because we are, just on a technical basis, we're at resistance. If we close above resistance, how much more are you going to make? 14 cents before we hit the next resistance level here? This is not a trade that has a good risk to reward from my perspective. I would not trade the stock. Facebook, weekly chart, a reversal week. We're off the highs of the week. 155 is the line in the sand. We close above that level. I would be okay with putting on a long trade here, despite my pessimism regarding Facebook for the past several months. There may be a trade to the upside. Good volume this week. And the only reason why I'm thinking about trading Facebook is that they disappointed on earnings, yet they're up. All right, so that's a contrarian indicator, daily chart. All right, so we recaptured the 150 level. We're consolidating. We retested it yesterday, and it held. So I would be okay with buying these shares, but I would use a stop on a closing basis right below 148.80. And I would not buy these shares until after 10:30 a.m. Why? I want to see if this market holds up, given the Apple news last night. Remember, the first hour of trade is amateur hour. Don't get involved with the stock during that time frame unless it's getting killed and you see an extreme overbought or oversold opportunity to take advantage of. ABB. This is for Tom Wick. He always leaves me nice comments. So let me go over this chart for him. He requested it. Let's first go to a weekly chart. All right, Tom, we have a bullish key reversal on the week, which would imply that we may get higher highs next week. But we do have resistance above at $21 per share. Now, this is the second consecutive week where we've retested this $19 per share level, which is a bullish thing. Volume this week is good. Daily chart. We have RSI rising, Stokes that are rising. I think we could rally up to this 20-period moving average. The problem here is that the 20-period moving average is still declining. This needs to flatten out because it's a natural declining resistance level, much as what you saw back here in March, where we hit the 20-period moving average not once but twice, and we didn't get through it until it flattened out and then moved higher. So expect resistance at this 20-period moving average. I will use that indicator as a line in the sand to, if you're going to day trade this or short-term swing trade, use that as your exit point. If you're looking to trade it longer term as a swing trade or a position trade, as a swing trade, I would wait for a close above that level, let it flatten out, let it close above, and then move higher. As a position trade, you need to wait for it to pull back and retest recent lows. And that is it for this morning, folks. I will be doing best stock charts for the coming week. If you're not currently a member, you're thinking about joining, I will be doing the week ahead commentary with members as I do every week. That is our strategy session, we kick it off with market wrap, where we review the health of the overall markets. Then we segue over into our positions. Then we do a deep dive into best stock charts. And we do further analysis and we identify those particular trades that we want to trade for the coming week. And we discuss the catalysts. What are those catalysts? Is it fundamentals? Is it that they pay a dividend? Is it that they are heavily shorted? What will cause those stocks to move higher or lower? Everybody have a profitable trading day and have a great weekend. Be well.